You finally make it to the front of the line at the rental counter, and the clerk hits you with the pitch. They want you to buy their collision damage waiver, an optional fee that adds $20 to $45 a day to your bill, easily doubling the cost of your trip. If you carry a premium travel credit card, you likely already know the standard countermeasure. You politely decline the agency's waiver, pay with your travel card, and let the bank's built-in insurance handle any potential damage. Bank marketing materials sell this perk as total peace of mind. But behind that marketing is a highly specific, legalistic certificate of insurance designed to protect the underwriter, not the driver. Treating your credit card's rental insurance as a generic safety net is the fastest way to assume catastrophic financial risk. Credit card rental insurance is strictly secondary collision coverage. It operates under a rigid set of boundaries, exclusions, and technical requirements. These policies operate on an all-or-nothing basis. Violate a single clause in the fine print, even accidentally, and the entire policy instantly evaporates. If you crash a car under a voided policy, you do not pay a standard deductible. You become legally liable out of your own pocket for the complete replacement value of the vehicle. Before you drive off the lot, you have to act as your own compliance officer. You must ensure the rental perfectly aligns with your card's specific rules. The most immediate hazard hidden in your cardholder agreement is the manufacturer's suggested retail price limit, or MSRP Cap. Almost every premium Canadian credit card draws a hard line on the maximum value of the car you are allowed to rent. This cap typically sits between $65,000 and $85,000 Canadian dollars. For years, a static $65,000 limit covered standard rental vehicles. That tracking the average MSRP of a mid-size family SUV since 2020, prices have surged, pushing standard family cars completely past these credit card limits. If your card caps out at $65,000 and you rent a $70,000 vehicle, the bank does not cover the first $65,000 and ask you for the remaining $5,000. Because the vehicle breaches the contract, the card pays exactly $0. This turns the classic free upgrade into a severe liability. If the clerk offers to upgrade you to a luxury car at no extra cost, accepting the keys instantly voids your insurance. With credit card limits frozen and vehicle prices climbing, a benefit designed to save you money easily becomes a hidden financial trap. Even if the price of the vehicle fits under the cap, the specific type of vehicle might not. Credit card insurance is heavily restricted to standard consumer passenger cars. Check your certificate of insurance, and you will find an extensive blacklist. Renting a truck to move furniture? Cargo vans are 100% excluded. Taking a Jeep off paved surfaces? Off-road vehicles are completely blocked. The blacklist includes high-end exotic brands, Teslas on certain specific cards, and absolutely any camper van or RV. You also face a rigid timeline. Most standard Canadian credit card policies limit consecutive rental coverage to exactly 31 days. Rent a car for 32 consecutive days, and the insurance drops off for the entire trip, not just a final day. You cannot cheat the system by signing back-to-back contracts at the same counter, as underwriters audit rental histories to flag continuous bookings. Requiring anything larger than a standard sedan or keeping the keys for longer than a month strips away your credit card safety net entirely. Let's say you crash an eligible car within your time frame. The rental agency will bill you for parts and labor, but they will also add a fee for loss of use, the daily revenue they lose while that damaged car sits in the body shop, unable to be rented out. Premium cards state they cover loss of use, but the underwriters require you to submit the agency's internal fleet utilization logs to prove the company had no other cars available on the lot. Rental car agencies consider these logs to be proprietary corporate secrets and routinely refuse to hand them over. Without those logs, the underwriter denies the claim, leaving you to pay the loss of use bill yourself. Getting a claim approved hinges on perfect payment execution. You must charge exactly 100% of the rental cost to the specific credit card. Split the payment, use a gift card, or put down a cash deposit, and your coverage dies. Finally, the person driving during an accident must be officially listed as an authorized driver on the rental contract, and they must perfectly fit the bank's definition of a covered secondary user. You can rent the perfect car for the perfect amount of time and still face a total denial of coverage due to a single administrative error at the payment terminal. Not all premium cards are identical. To navigate these hurdles, you have to know exactly how your specific issuer writes their rules. This matrix outlines the limits for 4 popular Canadian travel cards. Look at the MSRP column highlighted in red. Most cards, like TD, RBC, and Scotiabank, cap out firmly at $65,000. But there are outliers. The Amex Cobalt stretches that limit up to $85,000 Canadian dollars and extends the duration limit to 48 days, giving you far more breathing room on the lot. Assuming every piece of premium plastic offers the exact same coverage is a costly mistake. Checking your specific limits is mandatory. Here is the protocol. When you reach the counter and the clerk offers you an upgrade, step back and verify the vehicle's MSRP on your phone before you accept the keys. If the vehicle breaches your card's limit, Canadian drivers have an incredibly cost-effective alternative built into their personal auto insurance. It's called Endorsement 27. Often listed as SEF 27 or OPCF 27, this simple add-on can usually be attached to your personal policy for around $30 a year. Endorsement 27 takes the collision and liability coverage you already pay for on your personal car and seamlessly extends it to rental vehicles across Canada and the US. When the rental agency hands you the keys to an oversized SUV that breaks your credit card's MSRP limit, Endorsement 27 kicks in as your loophole-free backup. Making the right call at the counter requires a rigid decision process. This flowchart maps out the exact logic. Ask yourself, is the specific vehicle's MSRP definitely under your card's cap? If yes, use the card. If no, check if you carry Endorsement 27. If you lack both, you must buy the agency's waiver. For the travel optimizer, the rule is strict. Rely on your credit card only when renting a standard passenger car for under 31 days and charged completely to that card. If you need a large family vehicle, want to enjoy a luxury upgrade, or plan to drive for 5 weeks, paying the agency's daily fee is the only way to guarantee you're actually protected. The high daily cost of the rental agency waiver hurts, but it is a completely justifiable price to pay if you cannot mathematically guarantee you have navigated every loophole in your credit card contract.